Enjoy your meeting. Just a reminder, today's meeting is being recorded.
Hey everybody, good afternoon. This is David Blake with the Tuesday Tech Talk. And as usual, we're going to take a look at the last couple of days and try to figure out what's going on in the market. We're also going to talk a little bit about the upcoming election. I had a lot of subscribers come in and ask, what sectors and industries may outperform or underperform depending on the candidate. So we're going to go a little bit over that. We'll also look at the different indexes just to see some areas of support and resistance that we're currently in. Seems we've got going a little bit sideways currently. But at the end, we'll talk, after I talk about 20-25 minutes, we'll open it up to questions from you, individual stocks or industries or targets or anything that's on your mind. We'll try to go over some individual stocks like that. So I got a lot to talk about, so we'll get started right away. First thing is the big debate started last night. I thought it was a little bit boring, but I'm sure like most of you, I'm really pleased with the prospects of either one taking over the White House. We've got some exciting choices there for candidates. But I didn't see a lot of substance last night. I think currently what they're saying is that Clinton won the debate, and I think you saw that for the overnight futures. They were up triple digits, and then we had some saber rattling between Saudi Arabia and Iran this morning, which knocked crude oil prices out of bed, as that looks like any type of production caps are off the table again this weekend, and that's pulled crude oil down. But you still are getting a little bit of a small rally in the Dow and the overall market. You have the Dow Jones up about 88 points right now. The Nasdaq's up about 28 points, so about a half a percentage, even though to the upside, even though crude oil prices are down by about 2.5–3%. What we're going to try to do right now is take a look at the different indexes quickly, and then we'll move on to some of the sectors and how the Democratic or Republican candidate can affect those. So the first thing we have over here is the Dow Jones. Kind of an interesting chart here. This is we came down here, bounced around this 100-day moving average about a week and a half ago. And remember, the CTI is still on a sell. I think your upside is limited in here. We tested the 100 again yesterday, closed just a notch below it, but we are seeing a breakdown in the technical indicators. MACD, which is the intermediate term trend follower, is also still bearish. 14-day RSI is showing negative momentum, and the 30-day stochastic, which I like to confirm that the trend is up or down, is non-committal yet. It still is on a sell, but if it would come down here below 20 and stay for a little bit, that would confirm that the trend is probably has more to go to the downside. However, despite that we're kind of in a trading range, but if you take a look at the bigger picture and move out a little bit to the weekly chart, it looks a lot better. You have the MACD is still bullish. The 14-day RSI has a little bit of negative momentum, but not much. It's still showing positive momentum, and the 30-day stochastic is still above 80. However, you've got this ascending trend line that's coming up here, and basically what you want to watch for the the line in the sand on the Dow Jones is this 18,000. And we broke down in the 18.1 area last night or yesterday afternoon. And if that 18,000 doesn't hold, I think you're probably looking at a breakdown at least to the going back to on the 200-day. I mean, not the 200-day, but over here, I think you'll probably end up coming down here around the 17.8 area, which is kind of where the middle of this was back here around the Brexit vote. That stage, I would see if that we start to bounce off of that. If it doesn't hold that, you could get a worst case maybe down to about 17.6. But I'm looking at this stage, maybe a pullback on some weakness to about 17.8. If you take a look at the S&P 500, it's kind of the same story. We're bouncing off the 100-day moving average over here. Came up, crossed above the 50-day, couldn't hold it. We have a gap down yesterday. in the S&P 500. We're bouncing up today. We're up. We're up. Not. It's actually underperforming a little bit, but you've got this little triangle. You're coming in here. A break above or below that would be positive. The indicators again are leaning towards the negative side. MACD is still bearish. We take a look over here at the weekly, however, you're still in much better shape. You're up here close to pushing, one or two good days. You could be almost pushing back to this 2200, and the 14-week RSI looks strong. It's kind of confirming that. The 30-day stochastic's above 80, and the MACD is long-term is still bullish. But on this case over here, I think we had 2125 is 2145 is actually the area that has held support here in the last couple of days. If that would break, your next area is 2125, and at that point, you kind of have to kind of watch it to see if it's going to come down here and test this 200-day, 100-day moving average. If it does, then I think we could come down here to, I think I had 2060 to 2065. I think one of the things that could make the market pull back to that level would be to see Trump start to pull ahead in the polls. Not that he's going to be that bad for the market, but it's just the fact that the market hates uncertainty. At this point, a lot of when you have a new administration come on, the market just doesn't know what his policies are going to be. Even if he was as brilliant at describing what his policies were, there would still be some questions about it and uncertainty. And I think it would be bad for the market. So if he begins to pull ahead or break even in the polls, the chances of a more severe pullback, at least temporarily, would be in place. Now, the NASDAQ looks good in here. You got a nice ascending trend line. You have some negative divergence here in the 14-day RSI, which is a little bit troublesome. And despite this jump up here, you still have your MACD long term. Is still kind of sideways, which means the trend's not really confirmed. You do have someone says no audio there. If somebody could put a explanation on how, if you're not hearing the audio, that'd be great, because I can see most of us have it. But anyway, so the NASDAQ looks good. The line to stand over here is this 5190. That's the 50-day moving average. If it comes down here, you're going to watch to see if that's going to hold or not. If it doesn't, then we come down and we try this 5100, maybe even 5050, somewhere in that area. But like I said, I don't see a market that's ready to roll over and just sell off. Even the fact that we have a bearish market posture, that just means that the market seems weak in here. The business cycle is at a stage where I don't see a lot of upside to the market going forward here. Okay, on this Russell 2000, again, we almost made a new high on that. We came within a chip shot of making that. This, if we do get some buying going on here, or say if Hillary jumps up by, starts increasing her lead by say 15-20%, you could get one more little spike up here. And what you want to watch is to see if the Russell 2000 is able to break out to a new high, because that confirmation by the small caps would be a big positive for the broader market. And then if you follow the Dow Jones Transportation Index, if that's able to break above about 8150, that would be another confirmation that we could be in for another leg up. But right now we're cautious. Like I say, we have a bearish market posture currently, and I'm not looking to be actively, aggressively buying anything. I would buy some pullbacks, but I'd watch these areas that we just talked about for support before I would really maybe nibble away at stuff. And again, that's the Dow Jones. That's 18,000, 2120 to 2125 for the S&P 500, and 5190 for the NASDAQ. Now, of course, the Dow Jones has to break below 18.1 first, and also 2145 for the S&P 500. Okay, since Clinton's ahead in the polls right now, what I want to do is talk about some of the sectors and industries that could be moved by her emergence as a front leader or clear leader in the polls. And before I get ahead of myself too much, these we're going to talk about aren't. Sometimes we get on here and we talk about okay, here's a play we could get on the semiconductors. You might buy on this pullback and you could get a nice trade, or you could get a breakout trade on these. These are what I'm going to talk about now are sectors of the market that I think, especially if you have a pullback and you can think, well, this should be good if Republicans are ahead. This should be bad, or this should be good if the Democrats are ahead. And but they're not just to jump in and start buying these and hope you're going to get a trade. I would just watch how things unfold, and if Hillary's ahead and you start seeing and the market pulls back anyway, you want to start thinking what would be positive if a Democrat or Hillary becomes the president. Okay, one of the things that stands out is alternate energy, or alternative energy, I guess. But anyway, one of the few ways you can do that would be like solar energy is a big one. But if you want to have a little bit more broad base, because some of these companies that do this are pretty small, and they're pretty volatile. But some of the ETFs, the symbols are FAN. That has a lot of wind power. TAN has a lot of solar. PBW and ICLN, these are global clean energy companies that are more mixed, and they have a few things. If you do want to go into some individual stocks, there's some surprising ones here. A lot of these are solar picks. Again, some of them are FAN. Tesla's on there. I think Democrats would be more susceptible to some of the stuff that they want to do. Another area that you might look to pick up stocks would be in managed health care. The Democrats keep office. You're not going to have much of a change to the Obama plan. You might have some tinkering with it, but you could buy some of the health care stocks, the managed health care, Anthem, ANTM, Cigna, some of the LifePoint. There are some symbols of stocks that you can look at. And also on these things, when you look at some of these industry groups that we're talking about right now, you can go into the advanced tools and click on the industry group. And what you're going to get there, like if you go to medical devices, what you'll find is you'll get the strongest stocks in that sector. It'll also tell whether the sector is or industry is strong or weak. So if we get a pullback and you want to start picking up some medical devices, watch to see when that gets to be improving, and then you can pick up some of these. Here's CryoLife, Medtronics, Boston Scientific, Intuitive Surgical. Those are stocks that will not they won't be hindered by Democrats in there. And also with Obamacare, hospital stocks should do well. Here's a couple, HCA and THC especially. Now finally on that, multinationals would probably still do well as long as the dollar and interest rates stay down, which is probably more of a possibility with the Democrats. Multinationals won't have to face that currency crisis, and you can pick them up. There's too many of those to mention, but if you go into the industry group and look up conglomerates and that type of thing, you can get a whole list of stocks, whether you want to, whether it be IBM or GE or something like that. You can find an area. Okay, now if the Democrats are ahead, what's going to be negative? Okay, these are kind of fairly simple. I have gun makers in there, Smith & Wesson and RGR that you see these start to pull back because there's probably going to be more restrictions on that. Although every time there's a shooting, these and something like Taser kind of spike up as everyone runs out and tries to buy a gun. But Hillary also keeps talking about regulations on drug pricing. That's not good for the big drug makers, especially the bigger pharmaceuticals. Companies like Bristol Myers, Lilly, Merck, those stocks. I have Lilly in there twice. Sorry about that. But you may want to just lighten up, or you don't want to be aggressive in those stocks. Another one, we have the sin stocks, especially tobacco. You have like Philip Morris, R.J. Reynolds. They seem to have more regulation hitting them when Democrats are in office. Beverages such as there's Molson, the Budweiser, Brown-Forman, those would have a little bit probably not do as well with Democrats in there. Even casinos, where you have lots, MGM and Wynn, and what is the Sands, I believe that LVS is. So those would be some areas that you would probably, if you own them, you might want to lighten up on the positions, or even maybe just avoid them in this case. Now, if the Republicans are positive, at least according to the way Trump's talking, defense stocks would probably get a boost. You have stocks like Raytheon. They make all the missiles that are out there. Lockheed Martin. Just a ton of them. Boeing. There's a whole list of symbols on there. Again, if you go into the industry group, it'll list these from strongest to weakest. Energy stocks will do better, especially coal. The mining and fracking stocks will do better. The fracking is SLCA has done quite well already. It's up 50, 60, 70%. But those stocks those kind of companies will not face the regulations that when the Republicans are in office. Diversified financials would probably do better, mainly because again, less regulation. The more these stocks can better they can perform and have a chance to make money, and you might also see a little rise up in the interest rates. So USB, JP Morgan, Bank of America, Citigroup, Wells Fargo, Goldman Sachs, and Morgan Stanley would be stocks to look at. And last of all, we have the infrastructure stocks, and Caterpillar, John Deere, all these companies that will help Donald build his wall down there around Mexico. We can get a little bit of a boost, but not just that. That's kind of a joke, but he does want to. He does have his eyes set on maybe trying to improve the infrastructure of the airports, the roads, and you can't do that without these big construction companies. And we have two different industry groups that you could find for stocks in there. And again, you just click on the industry and it'll list the stocks in that group from strongest to weakest. On the negative side with the Republicans, basically just whatever was good for whatever you could get a boost off the Democrats, you might look at maybe not as good for the Republicans. The multinationals, especially if they start rattling the trade agreements. Again, alternative energy, the Republicans aren't as keen on that. They'd like to, they don't quite want to have the regulation of some of the pipelines and all that would be good for oil stocks like that. And finally, managed care, because if the Republicans get in there, they may try to shake up the Obamacare, and that would you might want to be on the sidelines in that case. So that's just some sectors. People have asked me over the last couple of weeks what I thought would do well, and that's just not me. I went in, took some notes from Goldman Sachs and some other firms to see what they were recommending for their clients. What areas and sectors, industries would do better or do worse under the administrations, and these are things that I picked up. Again, but once you these aren't fast plays, but these are looking out over the next year areas that you could to look at. Truth is, although these are all somewhat speculative, I don't think any one person can get a lot done all by themselves. But what happens here is it takes time to change policies, and Trump just brings uncertainty to his policies, and that's not a good thing for the market. I don't think Hillary's policies would do any better for the market, but again, just the fact that that you're going on with what you currently have is not likely to hit the market, even with considering with the interest rates are low and all. Okay, I did get a couple other questions that I want to go to on some individual stocks that we'll look at real quick. I had some questions about infrastructure names that might be good. And we're going to look at about 4 or 5 of these stocks, and then a couple of the medical device stocks that I had some questions on. The first one here is Cummins. CMI is the symbol on this. You can see over here, let me get my pointer out. Okay, we had a gap down over here the last couple of weeks. The gap came down to this ascending trend line. Also, is right around this battling this 100-day moving average. Now, one thing I wanted to bring up, we saw with the Dow and the S&P 500, both of them were finding support at the 100-day moving average. Okay, now you come in here and you see a stock like Cummins. It's pulled back, gap down. What happened? It found support right around the 100-day moving average. So if you look at charts and you start to see that, even though maybe you like the 21-day and the 50, or the 21 or the 50 and 200, if you start noticing that the same moving average is in play on a lot of these different stocks and indexes, use it. So that's what the traders, the bigger money traders are using, and that's where they're going to draw the line in the sand for themselves. This thing was if you start seeing, 50-day may come into play. But in this case, we're seeing a lot of indexes and stocks find their support at that 100-a-day. So in general, some other stocks that you may be looking at trading, if it's starting to pull back, that there's a good chance that it may be, if it's under accumulation or something, it's a good chance that it also will find support at the 100-day moving average. But anyway, you have a little pickup over here recently on the 14-day RSI. The up-down slope is flat, so it's not really a lot of accumulation or distribution. But it looks okay if you're looking if it holds this area right here. If it doesn't hold this area, you might get a chance to buy this thing down here around 110. Again, I'm not an aggressive buyer at any point. If you're looking to buy and it holds this area and cracks above this the 50-day moving average and fills that gap, then I would probably go in and buy the stock. But I want to see whether it gets up here or breaks there. One of the two. As long as it's going sideways on here, I don't see an urgency to buy it. Okay, here's Caterpillar. Caterpillar's also been in a range between 80 and 84. It's been holding. It's trading along the 50-day moving average, kind of walking up that thing right here. This area down here around 80 and change. It came up to that before. It came up to there, bounced off, finally broke through that, and now it's been coming down here and testing this area a couple of times. So that 80 and change, that represents pretty good support. You're seeing a little bit of pickup in momentum on the 14-day RSI. The up-down slope down here is still showing some distribution, so you're not seeing a big move in the Caterpillar. Again, I would kind of watch it go sideways. If it doesn't hold this $80 range, you could probably get a test out of the 100-day around 78. I might, if it holds that for 1 or 2 days, maybe you buy it in there. On the upside, you might want to see it get above 84 and actually take out this. It would probably be a double or triple top breakout on the point and figure. Okay, next we have John Deere and Company, symbol on this is DE. Again, we're in a range on this stock. It's going sideways between 76 and 88, up, down, up, down. When you see companies like this or stocks trade like this, one of the better trading indicators that you want to use is the 14-day stochastic. That will work out well on this thing. Stochastics usually aren't worth a darn when the market's trending. But this is a perfect example of going long and short a stock that's stuck in a range, and the 14-day would work well. I have the 30-day down here. I wish now I had put the 14-day in. You'd be able to see the buy and sell signals a little bit better. But again, with John Deere, it's found support down here a couple times. The 200-day, you might look for this thing to come down here and watch to see if it can get around 80. If it breaks 80, then I'd probably buy it down here to 76, 77 area. I think that would be fine. Okay, last on the infrastructure stocks, Parker Hannifin. The symbol on this is PH. This actually looks a little bit better, but there are some, I don't see a lot of selling on the up-down slope. We do have some negative divergence going on here with the 14-day RSI, which is just showing you the momentum is kind of rolling over here. And also on my 30-day, usually you get a sell when this thing crosses below 50 or above 50. You get a buy, and it's in the process of getting a sell. If it breaks this 50, it could come down. It's probably going to come down here to this 114 area and fill that gap. So that's your risk on that. Would be if you're looking to buy or wait. If you own it, if we break that 50, you have a real good chance of filling that gap, which you always want to watch. Once it gets here, it'll come down, and then you get a better chance to buy that thing. Okay, the next thing I want to look at real quick is some of the medical device stocks. At this stage, if you have some questions, I'd like you to go ahead and start typing them in so we can get to a couple more stocks. I have about two or three more here to look at. Okay, this is Medtronic. The symbol on this is MDT. And something really interesting on this. Okay, you have an ascending trend line coming up here, touching a couple places, came down there, drew it in here. You're unable to hold the 50-day moving average, but you've got a little bit of a sideways trend in here between 84 and 88. But this thing over here is what I wanted you to look at. This is the 50-day up-down slope. When you see a stock, when you're watching something, you see something that's going sideways like this, not a lot of action, But you see this up-down slope going from here all the way down like this. This is heavy selling. And what generally this is going to, what happens with this is a sign when you see this, get ready to get out, because this means that even though the stock's not really doing much, they're selling. They're taking profits in this thing, and when this thing gets ready to break, it'll usually break pretty quickly. Okay, so if I own this thing right now, I'm going to have a real tight stop on this thing, and if it breaks that trend line or even flirts with it, I'm going to be out as long as this thing's going down. That means when something's moving that fast, you're getting more institutions dropping that. Now, this could be it could be that the fact that if they think Trump is going to be a winner, going to go ahead and start moving up in the polls, which through this area he kind of was, that may be a signal that institutions are lightening up, just figuring, well, if he doesn't win, I'm not sure what Trump would do with these things. Next one would be ResMed. The symbol on this is RMD. This is not a very good looking chart. Here you can see the gap like we saw a couple other times, and then we came down here, and once that gap started to be filled, it filled it pretty quickly, bounced off, and then rolled over again. Again, we got the 100-day moving average coming into play again over here. Just below that, you have the ascending trend line off a couple lows. You have 1, 2, 3, 4, 5 times it's touched that. So that's probably a given that that's going to at least hit that. Again, look at this up-down slope. Right here, they started rolling over that. Now, I don't know if that's, again, that could be because Trump was moving up in the polls. Not sure. But a lot of these medical stocks, you're seeing, they're kind of rolling over. Again, I'm not sure exactly why that is. You also have, a rollover in the momentum on the 14-day moving average. So, one last one in here is Spectranetics, SPNC. This is a little bit better. You're getting slowing momentum on this thing with the 14-day RSI. You've also got another sell on the 30-day stochastic. Now this is just for a sell. These are for shorter-term trades. If you bought this thing in here and you were trying to get a quick trade, you're probably selling it at this point. But it's not showing you're in a trend until it goes below 20 or above 80. That confirms that you're probably going to in a trending move lower. But the up-down slope is kind of sideways, so you don't see a lot of that going on. If I was going to buy this thing, I'd wait to see it. So far, the 50-day has held. I'd wait to see what's going to happen with this thing, whether it's going to hold that 50-day or not. And again, with the broader market, we have to take a look at it. So what I'm going to do over here right now is close this down and see if I can share the screen with you. We have a couple stocks here to look at. We can see the screen, the stock chart. Huh? It's okay? Okay. All right. So I had a question here. Someone wanted to see KBE. I believe this is the regional, this is ETF. This is the regional bank spider. Let me get rid of some of this. And the trouble with the banks right now is we keep getting, you keep getting whipsawed. The institutions keep coming in, and they're clearing a lot of stuff off their balance sheets and all. But you get these spikes up, these little runs up in anticipation of a rate hike that never happens, and then they start to roll over again. Over here, you can see this thing. Yesterday, it broke below the 50-day. Well, if you've been listening for the last couple of weeks, I still think because they're so cheap that you still want to nibble away at the bank stocks on pullbacks. If this thing, we get another couple of days down here, the 30-day stochastic is showing that we have a good chance of probably going lower. You're under distribution here again. Here was where they ran it up into the expectations possibly for a September rate hike. And again, when you see this thing go sharply down like that, that's a lot of institutions and funds selling. Otherwise, it's more gradual, like over here when you come down. But that meant that they're kind of going on the sidelines again. They keep getting whipsawed every time they think rates are going to go up. It'll be good for the banks. Yellen doesn't do anything, and they sell them off a little bit. But at this stage, I would be buying these things on pullbacks. I'd have a select few that I would like to buy. The J.P. Morgan still look good, Citigroup looks good, Bank of America. And when they pull back, go maybe around their 100-day moving average, again, like when we talk about the indexes and stocks finding support there, that may be a place that you want to take a look at some of the adding to the banks. Buy a little bit there. If the market rolls over and gets a little bit, get a little more aggressive selling, then you maybe look again at the 200-day moving average as a place that you'd want to buy some of these. But the regional banks, I believe, are also, you don't want to just buy a J.P. Morgan and hold on to it. I think you can get some other good growth prospects with the regionals. Okay, I don't see any more questions coming in. We've got about 30 minutes. Okay, I guess we'll try to wrap it up with that. Again, like we still have a market posture that's bearish. The CTI is probably it's projected to stay bearish for another week or two, and then it'll depend on whether or not whether or not we'll watch to see whether they make new intraday lows. If it does, it'll extend the cycle out. If after a week or two we stop seeing new lows coming in, then we could go. But even the breadth is kind of mixed at this stage. You're having some contraction in the new highs and new lows. Even though you have the NYSE AD line going up, our strength indexes, which kind of measure selling and buying pressure on the different indexes, they're still negative, which means you're having a little bit more volume and stuff, pressure to the downside than the upside right now. Even though you're getting moves up, when we do have a down day, you're seeing more stock go out the window. And one more last question here on Twitter, TWTR. That's a speculation. I mean, it looks like they're closer now to getting bought out than anything. Whether you think it's worth $23 or $28 is if you buy it. I have no idea, and I don't know. I play that when it gets down around $13, $14, $15, and get out about 18. So I don't have any idea whether they would get bought out or not. Anyway, we're going to wrap it up next week. If you have any ideas for what you'd like to talk about next week or any stock ideas, please feel free to email me. You can get me at the doc at marketedge.com or at dblake at marketedge.com. Other than that, have a good week. We'll talk to you next week.